Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets? Well, it's kind of earnings seasons, right? And so far the earnings have been mixed, but the market's kind of hanging out at these record high levels, right? And I have a small short position on. I'm short the QQQ at 498. It's sitting right about the same. Goes up a little, goes down a little. I'll take it off if it gets past the 525. I put a 5% move. If it goes up 5%, I'd be stopped out of my trade. We'll see if that happens. But I do think it's time that the market stop to come down. Now, earnings season's fascinating to me. Okay, so you got the S&P 500 stocks, right? And now if you take away the Magnificent Seven, those are all the high flyers, the Nvidias, the Apples, and all those stocks. You take out just 7 stocks and leave the S&P with 493 stocks. Well, the earnings are contracting. They're actually contracting. We're actually in a recession on 493 stocks, but 7 stocks push the earnings up higher, right? It's only 7 stocks pushing this market up higher. 493, we're contracting and we'd be in a recession. The other thing is we've spent over $2 trillion on top of the money we take in this year. So we're another $2 trillion in the hole. And if we took away all this excess spending, where would we be? What about the 30 trillion we spent just since the pandemic, right? What would that do if we took that out of the market? What would happen? We'd be in a depression. So they have to keep printing the money to pump up the stock market. And that's my take. They're going to keep trying to do it, but it has less and less effect. We used to print $1 and we get $3 in GDP. Now we print $3 in print $3, get $1 in GDP. The problem is that the printing of money is becoming less and less efficient. It's not working. It's going to cause a downfall in our country. Once again, just my take. You may be a moon boy where the stock market's going to the moon. Okay, so I want to talk about what's really going on, what's really happening. Well, my opinion is that the Federal Reserve has now lost control of the bond market. They've lost control, right? Okay, so what happened? They lowered interest rates by 50 basis points. But what happened? The long end of the curve went up by 50 basis points. Now, what's the long end of the curve? That's where people borrow money. That's where me and you borrow money to buy a house. That's where you got car loans at the longer end of the curve. You see, they controlling the 6-month to 2-year money, right? 6 months to 2 years, that's the rate they're lowering. That's where they control the market. But the real market is in this long end, right? And this long end is rebelling. It's going up higher. It's going up higher. And people laugh at me when I say we're going to get mortgage rates above 10%. Now, why do I think we're going to get mortgage rates above 10%? Well, it's because of inflation, right? I mean, if inflation's above 10%, nobody's going to loan you money at 10%. You're going to have to pay above that. And right now, the reason that we got the long end going up is because people believe that inflation's not dead. You see, now the short end is where they lowered it by 50 basis points, but that long end's going up. Why? Because they see the inflation coming. Now, would you loan money to the government 4% for 30 years, the next 30 years? No, you'd be an idiot to do that. You'd be a fool to do that. And other countries are catching on. What they're doing is they're turning their bonds back in and they're buying gold. They're buying gold and gold keeps going up. Gold is screaming that we got inflation and that inflation's not dead yet. You go on shadow stats, inflation's still above 8%. They're telling you it's only at 3%. Of course, they take out everything that me and you buy. They take out food, take out gas, take out a bunch of other stuff, and then they can say it's only 3%. But look, you can do your own survey. Just look at the stuff you're buying. How much is it going up each year? Give me a number in the comments. I'm telling you, it's not 3%, going up at a faster rate. Okay, so now here's the thing. Okay, so now gold is kind of in a pausing territory. Why? Because they see the longer end of the curve going up. Okay, now what's that mean? Well, it means that you're going to get once again, mortgage rates are going to start creeping up towards 10%, in my opinion. Eventually, they'll go above 10% because inflation is going to be above 10%. So the mortgage rates will continue to go up. Now, what's that do to the housing market? Housing market's frozen right now. Abysmal numbers coming out of the housing market. But you haven't even seen the real numbers yet. I mean, they're still back in September. And those were sold in July and August. You wait till the numbers come out in December. Oh, it's going to be horrible, just horrible. But anyways, what's happening is, right, so as the mortgage rates continue to go up, everybody thought that the mortgage rates would come down when the Fed cut the rates. So you had some, and don't get me wrong, you got demand out there. People want to buy a home, but they cannot afford to buy a home, right? Because why? Prices are too high. Prices are too high. You get the mortgage rates up above the 10, 12%. You're going to see the house prices coming down, probably by about 40 or 50% from where they are now. And that's going to create a lot of havoc in the marketplace. You see, right now, you've got a small pool, a very small pool of qualified buyers, of people that can afford to buy at these high rates. It's very small. They're holding back because they see the writing on the wall. They're kind of getting a little bit smart. They're going, hey, guess what? Mortgage rates didn't go down. Mortgage rates went up. What's that going to do? Oh, people cannot afford to buy homes. Oh, so nothing's selling, right? Well, people have to sell the homes. Now, a lot of people say, but Mike, I'm locked in at 2.8%. I'm never going to sell. And that's perfectly fine. You can sit there all you want and watch your house go down by 50%. And that's fine. That's what I'm going to do. I don't have a mortgage on my house. My house is up here and it'll be cut in half. And I'm perfectly willing to accept that because I love where I live. I'm going to stay here. But yeah, I expect the price to come down about 40 or 50%. But if you have a mortgage, see, that's a problem because a lot of people will be underwater at that point. They'll be down here and their loans up here. Now, will they keep paying? I don't think they will. I think they'll hand the keys back to the bank and buy the house next door to them that's for sale. You see, what's going to happen is the floodgates. The floodgates are going to open. Right now, nothing's selling, right? Nothing's selling. Now, when nothing's selling and inventory's rising 36% year over year, inventory's up, right? So houses are coming onto the market, but they're not selling, right? So the days on market get longer and longer and longer. Eventually, someone's going to have to sell. Why would they have to sell, Tall Mike? They're locked in at 2.8%. Maybe they lost their job. Maybe they got a job transfer and have to move. Maybe someone died. A lot of the baby boomers starting to die. Just had another good friend pass away. Anyways, they put those houses onto the market after the person dies. That's just how it works out. So the death, a job transfer, a divorce. Does anybody get divorced anymore? I'm telling you, people do. And this money problem, you see, with inflation going up and up and up, guess what else is going up and up and up? The divorce rate's going up and up and up because the number one cause of divorce is money problems. Money problems are out there and they're getting worse and worse and divorces are going up. And those people put the house on for sale. They call me up. They say, hey, Tall Mike, get me out of my house at any price. I just want to get out. We got to break up. We can't stand to live together anymore. So we got to split the assets. You can't split the house, right? Somebody's got to buy the other out. They're both broke though. So you got to sell the house if they have any equity left. Soon they're not going to have any equity left. Then they're just going to hand it back to the bank. But either way, you're going to start to see this inventory rolling onto the marketplace, right? But things are frozen. Rates are going up. They're not coming down. They're going up. And I think they're going to continue to go up. I think they're actually going to get above 10%. Just my take. I know a lot of people laugh at me for that. They go, that's impossible, Tall Mike. Just not possible, right? And maybe it's not. That's just my take. You got your own opinion. You're entitled to that. My opinion is we're going to be above 10%, both in inflation and mortgage rates are both going to be above 10%. We'll see how that plays out. But you see, when they cut that rate, you see people see the inflation come, so the long end goes up. Now, here's the thing. As houses start to come down, houses make up, 20, 30% of the CPI. So you're going to get inflation numbers coming down with the house, right? Coming down with the house. Now, you might get a temporary pause in the gold market here. Now, you know I'm the biggest gold bear there is. We're going to 5,000, 10,000. But you might get a little setback here because people are seeing this. Rates didn't go down like expected. It's actually going up. People seeing that this might cause a problem in the house market. House market comes down. CPI starts to look okay, though it's not getting carried away, right? Because the price of the house is going down at such such a fast clip that it's going to help out the CPI. Okay, your cost of food is going to be going up, your gas is going to be going up, your heating bill is going to be going up, your insurance is going to be going up. All that stuff's still going to be going up, but your house is going to be coming down because the mortgage rates get too high. This, once again, is just my take, but I'm expecting a 40% drop. We always revert back to the mean, and that would be just reverting back to the mean. We sometimes overshoot. Maybe we get a 50 or 60% correction in the housing market. But Mike, that's impossible in my area. They only go up in my area. Nobody dies. Nobody gets divorced. Nobody loses a job. My area, we only go up, and it's a great area to live. You should buy another house there before they go to the moon, right? Okay, but in most areas, the houses are going to be starting to come down. But you may get a pullback in the gold market here. Look at gold's had a great run up, right? Silver's had a great run up. We're at what, 2,800 on gold? It could pull back to 2,500. I think that'd be very healthy for gold to see a pull back down to the 2,500 level, because that'd give me a chance to get in. I got dry powder ready. I'm waiting for that pullback. Don't get me wrong, I got a big gold position, but I know gold's the place to be. Why do I know that? Because they're going to keep printing money into oblivion. They have to. We have the unfunded liabilities, 120 trillion. We got 36 trillion in debt already, and we got the Federal Reserve with 8 or 9 trillion on their balance sheet. Now, here's the thing. The Fed's going to have to start buying the long end of the bond curve. Now, why are they going to have to be the buyers? Because no one else is stupid enough to buy. So the Fed's the only one left, right? They're the buyer of last resort. So the Fed's going to start buying these, but what's going to happen to their balance sheet? Going to go from 8 trillion, 9 trillion, 10 trillion, 20 trillion. I bet we hit $30 trillion on the Fed's balance sheet when this is all said and done. We'll see how it plays out, but they have to buy everything, otherwise everything comes crumbling down, right? So they're going to be buying the long end of the curve to get that down. Maybe mortgages can stay down. Maybe they can keep the houses propped up. We'll see how it plays out, but I know then if that's their game plan, you want to be in the gold market, because gold will be 5,000, 10,000, and gold is real money. And in terms of real money, your house is going to be in free fall. Matter of fact, it's already in free fall, along with many other assets compared to gold. Gold is the one leading the charge higher, outperforming the stock market for the last 20 years, outperforming it again this year. And it's going to continue to outperform as long as they keep printing money, as long as they're not fiscally responsible, as long as the politicians remain evil and want to destroy us. They want to destroy us. Look, people think printing money's good, right? Because they can hand it out to people. Look at the rich people. They're begging them to print more money, give it to the poor people. Print more money, give it to the poor people. You know what happens? All the money that poor people get, it ends up in the rich people's hands. What poor people do, they go buy stuff on Amazon, right? Jeff Bezos gets the money, right? The stock market continues to go up, continues to go higher. I don't know how much they can blow the asset bubbles up. Housing market's in a bubble, stock market's in a bubble. They blew these up, and they're blowing up a lot. But the rich people want to keep printing money. The poor people are screaming, we need money, send us money. So, the poor people have this backwards. They shouldn't want money. They should not want it, because how does the government give it to them? It gives it to them by printing it. When they print, the rich get richer and the poor get poorer. The class divide has never been bigger. Not even in the Great Depression is the class divide as big as it is now. Why? Because the Fed keeps printing money to keep their people rich with 10 million, 20 million, 100 million. Look at the Federal Reserve. Powell, he's worth over 100 million. All of them are worth millions of dollars. And that's why they keep printing money, because their assets keep growing. What does it do to the poor people? What does it do to the middle class people? It destroys them, crushes them under the weight of it all, right? But you got this problem now. The Fed is losing control, right? And it's going to not last much longer. We don't have that much time, right, before the reset comes. And there's going to be a reset. What are we going to reset against? I'd say we're going to reset against gold. Look at 1/3 of the world's population. They're going to the brick currency. That's backed by gold. They're going to get out of the dollars. All those dollars are going to come flooding back here to the U.S. Nobody's going to want them. The dollar is going to be straight down worthless. What's gold going to do? Straight up to the moon. I'm a moon boy on gold. That's one thing I am. Silver's probably going to outperform gold by at least 2 to 1, right? Just because of the ratios right now. We're at, I don't know what it is, 85 to 1. Comes out of the ground about 10 to 1. I think it'll definitely get down to 20 to 1. Might get all the way down to 10 to 1. Where'd that put silver right now? Put it about $270, right? That'd be a 10 to 1 ratio. That's where silver should be, but they keep it suppressed. Why do they keep it suppressed, Tom, Mike? Well, it's called the military, right? They use it in the bombs. They use it to blow things up. They use it to finance the war. Silver stays low. It costs less to finance the war. They can actually do it with the fiat currency. If they had to finance wars with gold and silver, there'd be no wars. You can end the wars. Take the power back. Do the quiet revolution. Take your currency out of the banks. Buy some real money. Buy some silver and gold. Take the power back. The people need to get the power back. We got to get it away from these evil politicians. And believe me, they are evil, man. They are destroying us. Anyways, if you like this stuff, give me the thumbs up. Punch that subscribe button. Get out there, everybody. Have a great day. We'll talk again later in the week. Bye-bye now.